talk some stocks. We do have some news in Tesla as the shares have been moving higher. They've been ripping here the last about 4 or 5 days, Renita. Kind of carrying the torch as some of the AI stuff fizzled out. Tesla's got its groove back.
It does, and it came through charging networks. So today, or actually last night, I saw this news come through as I was leaving the newsroom that Tesla is opening up its charging network to GM vehicles now, GM EVs, and that makes 12,000 Tesla superchargers available to GM EV drivers in North America. That'll begin in 2024, and beginning in 2025, GM EVs will be built to gain direct access to Tesla superchargers without an adapter.
Let's discuss stocks. We do have some news regarding Tesla, as the company's shares have been rising, and they've been ripping here for the past 4 or 5 days. Renita kind of carried the torch of some of the AI stuff that fizzled out, but Tesla's found its groove again, and it came through charging networks. So, while I was leaving the newsroom last night, I saw that Tesla's opening up its charging network to GM vehicles now, GM EVs, making 12,000 Tesla superchargers available to GM EV drivers in North America. This will start in 2024, and starting in 2025, GM EVs will be built to allow GM EV drivers direct access to Tesla superchargers without the need for an adapter. Thanks to the automaker's most recent groundbreaking actions, Tesla's stock price is poised to surpass $300. Tesla's recent improvements are anticipated to cause a stir in the electric car market and upend the competitive landscape, demonstrating not only the extent of its power, but also the cooperative efforts creating the future of sustainable transportation. In a recent interview, Managing Director and Senior Equities Research Analyst Dan Ives expressed his opinions, pointing out the significant advantages for Tesla. However, the stock analyst also increased his price. Stay tuned as we uncover valuations, predictions, and estimates from prominent figures in the investing world. It promises to be an exciting ride, so you know that 2/3 of the world is covered by water and the rest is covered by you. Target on the stock a few months after citing lowering margins as a huge resistance to Tesla's stock performance. In this video, we will delve into the fascinating story of how Tesla has overcome investors' fears and reached analyst standards for a top-rated stock. Dan Ives, there are many stocks in your universe that you cover, but Tesla is undoubtedly at the top. What is it about this stock and the firm that is making you feel so positive right now? I believe that what has transpired is actually only a few parts. What's beginning to happen is that the 313 area code, after years of resistance, realizes they need a password. I'd almost call this an AWS moment, an Apple services moment for a Tesla. When you look at the supercharger from a revenue perspective, I believe that if you go out in 2025 and GM4 gets 15% of the market, you're looking at an additional $3 to $4 billion in revenue annually that wasn't there. And I believe that what's beginning to happen for Tesla right now, from batteries to superchargers to storage, some of the pieces of the thesis are now beginning. And I think that's what's actually beginning to happen with the stock conversation right now, in the early phases to play out with investors. Recently, GM and Ford declared that owners of their electric cars will be able to use Tesla supercharging stations and Wednesday starting next year. Dan Ives, a Bush security analyst, believes that something significant is happening here. He increased his target price for Tesla from $215 to $300, adding that the recent partnerships offer a significant opportunity for Tesla to make money. He claims that Tesla is only beginning to sell access to its infrastructure and technologies, and that an AWS moment is imminent. Welcome back to Tesla. Everyone, before we get into the specifics, let's take a moment to truly see how fascinating the AWS business model is. Amazon Web Services, or AWS, was once a risky bet that turned into a huge success for the online retailer. It began as essentially an internal cloud that the company built for itself out of necessity. Selling access to the infrastructure it had developed turned out to be a brilliant business move for Amazon, surprising both the company and outsiders with its success, and making the then CEO Jeff Bezos even wealthier. Today, Tesla has technology and infrastructure that it had developed for its own use, and is now allowing legacy car makers to benefit from this infrastructure as well. Could this be the deciding factor for Tesla's growth in the near future? Stay tuned as we bring you all the details. I think the golden goose right now is that they built a castle and are waiting for others to call. Dan Ives told CNBC, adding that he thinks this is just the beginning for Tesla. He said the automaker began with superchargers and that battery technology may be the next step. Jim Farley, the CEO of Ford, and GM CEO Mary Barra has called into question whether access to superchargers will increase sales of electric vehicles for GM and Ford. Since Elon Musk has stated that Tesla needs GM and Ford to succeed for the larger EV vision in terms of just adoption in the United States, I've maintained that it's not a problem for Tesla. Elon Musk recently tweeted that he is happy to license FSD or other Tesla technology, and that Tesla wants to be as helpful as possible to other automakers by allowing them to use our supercharger network. Our biggest concern with Tesla has been its shrinking margins, particularly after the price reduction. Earlier this year, a Bush analyst decreased its price objective for the company by $7 when it revealed deteriorating earnings and margins, but he is still optimistic about the company's future. He wrote in a note to clients that although Tesla produced mixed numbers with strong demand metrics, the real elephant in the room is weaker margins that will weigh on shares. At the time, I observed that Tesla's softening operating margins were delicate concerns that were keeping Tesla investors up at night. Ives went on to say that although he is still extremely optimistic about the Tesla story, the story of price cuts and margin compression needs to be carefully managed in the upcoming quarters as it becomes evident that the stock is overhanging. Citing Musk's remark regarding Tesla's annual target during a prior conference call, Wedbush has declared that the company's 1.8 million delivery plan is still attainable. Musk's comment, according to Ives, was a definite plus in a volatile macro, but he cut his price even if the analyst kept his outperformed rating on the company. In the upcoming quarters, a target of $225 to $215 will represent additional near-term margin softness. Interestingly, after these new partnerships, Tesla's revenue and margins are going to get really alluring. I have stated that the automakers Ford and GM charging partnerships have the potential to produce billions of dollars in the coming years, and he believes the corporation is only beginning to offer such services. Income I mentioned the two automakers as early proponents of Tesla's strategy to make its technologies available to everyone, including storage, superchargers, and batteries. With investors, the sum-of-the-part argument is now beginning to take shape. For example, Dan Ives is hardly the only analyst who is optimistic about this. According to a research note by Piper Sandler, Tesla could increase its revenue from non-Tesla owners by up to $3 billion by 2030 and $5.4 billion by 2032. Tesla will be able to develop its charging network in a similar manner with the aid of such revenue and federal incentives. Analysts at Goldman Sachs predicted last year that adding competitors to Tesla's charging network would increase the company's yearly revenue by $1 to $3 billion. According to Wedbush, Tesla's agreement with GM and a similar one with Ford might generate an extra $3 billion in revenue in the upcoming year. This will present Tesla with a number of opportunities. Ives thinks the decision was also wise for GM, since it will enable it to fulfill its goal of providing its drivers with access to 134,000 charging stations. One could argue that these partnerships might persuade some potential Tesla buyers to switch to Ford or GM EVs, but it's important to highlight that for Tesla, the advantages far exceed the drawbacks. Do you agree? Tell us in the comments area how much you think Tesla is worth. If you want to see what Tesla has been up to lately, click on the next video that appears on your screen. See you there. Vehicle technology, which includes its batteries, electric motors, and self-driving capabilities. In order to stay ahead of the competition, businesses make significant investments in research and development and continuously enhance their own technologies, which is the case with Tesla number 5. Aside from its automobile industry, which has generated enormous profits, Tesla's revenue is diversified. While Tesla's business model is skewed towards the automotive segment, other segments like services and energy storage and generation are going to play a key role in the future. FSD and robo-taxi will contribute massively to Tesla's revenue along with its supercharging business, which has been gaining a lot of momentum lately, as well as the insurance business robots. Electric cars are already known to be the future of transportation, and most people will agree on that. The only remaining uncertainty is when this change will happen. Tesla stock and its investors have a lot of things ahead of them, including mining, refining, and the Dojo supercomputer. Please share your predictions for the future of Tesla stock in the comment section below. If you'd like to learn more about what Tesla has been up to in recent days, click the next video on your screen. We hope to see you there.